Okay, so again, just like in accounting one, just like we talked about before, and the difference in accounting one and accounting two is that in accounting one, we looked at these businesses that are just sole proprietorship type of businesses. Accounting two here, now we're looking at corporations. What's a corporation? Like, what is a characteristic of a corporation? How does a corporation differ from a sole proprietorship? Business X students?
Oh, it was like bigger.
Bigger, like the size? So just the size, like we talking physical size, or are we talking number of employees? Are we talking
everything?
So everything. So a sole proprietor can't have more than how many employees then? Because you're saying the size of the employees dictates whether it's a sole proprietorship or a corporation, right? What about the size of the building? What's the size of the building cutoff? There is none. What is the characteristics that's different between a sole proprietorship and a corporation? Who owns a sole proprietorship? How many owners? One. How many people own a corporation? More than one, a lot. And those people who own a corporation are called what? Stockholders. So the difference between a sole proprietorship and a corporation was, number one, sole proprietorship is only one owner. The ownership structure is a lot simpler. It's just you. You have a lemonade stand sitting out in your front yard, you have a sole proprietorship. Corporation is multiple owners. There is a legal process that goes in where you are creating a separate entity, and the owners are these people called stockholders. And in order to be an owner, what do they have to do? Get the whole stock. How do they hold stock? They buy it. They give you money. Okay, so this is a little bit different setup. You've noticed that, right? That the accounts that we're using and some of the things that we're doing here in accounting 2 is now a little bit different than what we did in accounting 1. The financial statements that we are going to use are the same as we did in accounting 1. Do you remember the 3 financial statements that we created in accounting 1? The income statement, the balance sheet, and
changes in owner's equity.
Okay, statement of changes in owner's equity. The balance sheet and the income statement are going to stay. How do I know that? And what's my first clue? Look at the worksheet. What are the last 2 sections of the worksheet? The income statement and the balance sheet. Okay, we're going to change from a statement of changes in owner's equity to something called a statement of returned earnings. Okay, because if you notice, there's 2 different accounts now that have been creeping in. One of those accounts is called, I don't want to give you the wrong term. I probably just threw out my notes that I would use. It's capital stock. This is the account that is similar to that of the capital accounts in accounting 1. This is the amount of money that people have invested or given us to buy stock. The second account that's creeping in now is called retained earnings. If you understand how this stock holding thing works, buying stock works, if I buy stock, I have ownership in a company. Again, we can get more creative. There is different types of stock, common and preferred stock. If I own preferred stock, that means that I get voting rights. What voting rights means is that the annual stockholders means I can go to that and I can place a vote based off of the number of stocks that I own and kind of make major decisions. With that, I'm not first in line to get paid dividends. Common stockholders, we rephrase it. Common stockholders have voting rights. Preferred stockholders don't have voting rights, but they're first in line to get dividends. Corporation will only pay out dividends if there's enough money there to pay out. First of all, there has to be a profit. Second of all, that profit has to be big enough that they can pay out. They're just making a few extra, even put in the terms of a corporation, they make, $10 million. They still need that money for next year. And they still need some operating money. They still need some profit to invest within the business themselves. Okay, so that profit amount needs to be big enough. When there's money left over after these capital stockholders are paid out, we refer to that as retained earnings. That's the money that we kept. That's the money the business has left over. Okay, so they don't pay out their entire profit, right? We're going to figure out a net income here in this net income statement. This income statement, that entire net income does not get paid out in dividends. Some of that is held back for the company and goes in that retained earnings account. Okay, so that retained earnings changes or turns into that statement of changes of owner's equity. So we still got these three major financial statements. Taking a look at the income statement. And if you remember back in accounting 1, the income statement had how many sections? Pretty simple. It had like 3 sections. What were they? What is the formula or what constitutes income? Okay. Revenue, expenses, and then the net income or the net loss. Right? That's it. And in concept, it's the same, is true, but with being a corporation now, there's more to it. So now there's 5 sections to the income statement. There's the revenue section. There's the revenue section, cost of merchandise sold section, gross profit on sales, operating expense section, and then our net income. So we're really laying out detailed where all the money is coming from. And what I want to do is, I'm not so concerned on the fact that you memorize this format. How many people would be freaked out right now if I said, all right, you have to memorize this format for the test? Okay? I know I would be. Because this looks pretty complicated, right? I don't so much want you to focus on memorizing as I want you to understand the format. You notice that we have how many columns here? 4. Understand why there's 4 columns and understand where these things go or how those 4 columns are used. So to do that, in that handout that I gave you, on the back side you have this. Use your imagination a little bit to envision this being the income statement. Again, we have our 5 sections. The revenue section, and I'm going to strategically place these headings where I know they go, so that we have enough room. We have what's called the cost of merchandise sold section. the gross profit on sales section. The operating expense section, and then lastly, the net income section. You completed your study guide for yesterday. You know that, or at least you wrote those 5 sections down. All right. Now, the reason there's 4 columns is we eventually have to get to a formula down here at the bottom that allows us to determine or calculate net income. Net income is calculated by taking net sales. You remember all those formulas that you wrote down in your study guide? There was a bunch of them, right? One of them was for net income. By taking net sales subtracting out cost of merchandise sold, taking cost of merchandise sold, subtracting that from net sales, that is going to give us our gross profit on sales. And then by subtracting our total operating expense, be able to determine operating income. And then subtracting out that federal corporate income tax expense amount, that will be determining net income. All right? Now, that's our main formula. There are formulas embedded, or equations embedded within this main equation. Net sales. Let's start with net sales. Net sales is calculated by taking sales and subtracting sales discounts